The US published extremely weak preliminary estimates of its business activity. This allowed the market to show a long-awaited bounce, which turned out to be very modest. The euro failed to climb above the parity level, and meanwhile the US dollar index managed to return to its 20-year high earlier today. Notably, the market ignored disappointing data from both Europe and the UK. Their initial estimates of business activity were very below the forecast, and this means that investors are taking into account only news from the United States, since a lot depends on the Federal Reserve policy. It's still unknown whether the Fed will revise its plans. Only Jerome Powell's speech may clear up the situation. Although the Jackson Hole Economic Symposium starts tomorrow, the Fed chair is going to comment on the current state of affairs only on Friday. Until then, the market is likely to consolidate near the current levels. Even yesterday's speech delivered by Neel Kashkari will hardly make the market move. He said that the greenback's appreciation might affect the policy conducted by the Federal Reserve. Against the backdrop, the euro-dollar pair settled below the parity level, thus pointing to the prolongation of the mid- and long-term downtrends. The reading of 0.99 was acting as an intermediate support level. When the pair touched this level, it rebounded to the earlier broken area of 1.00. On the daily chart, the pair is hovering near the levels recorded in 2002. Since June 2021, the euro has lost about 18% or 2,300 pips. Now the currency is under significant pressure exerted by sellers, who are still pushing the price lower amid high speculative activity, and traders are ignoring numerous technical signals of the euro's oversold conditions. This, in turn, may lead to an inertial movement. It's quite possible that the price settlement below 0.9900 will cause a further drop to 0.9850 and 0.9650. Judging by the history some time ago, the pair formed a sideways channel near these levels, which was located below the parity level. The price may start on an upward correction if it consolidates above 1.0050 on the forward chart. Meanwhile, the volume of long positions on the pound-dollar pair increased after a short-lived stagnation near the support level of 1.1750. As a result, the pair showed a technical rebound and added 120 pips. Since short positions on the pair were overheated during 1 week and a half, the price might have shown a more considerable rise. On the daily chart, we see a prolongation of the mid-term downtrend. Since June 2021, the pound sterling has lost about 17.50% or 2,500 pips. Although the British pound rebounded, it's still oversold, and that's why the price settlement above 1.1880 may force buyers to form a fully fledged correction. To continue falling, the pair should fix below 1.1750 on the forward chart. And that's all for now. We continue to learn developments on financial markets. Subscribe to our channel and follow news with us. See you soon.